What is happening, friends? My name is Mike. This channel's name is Health and Wealth. You clicked on this video today because we are talking about MSTY and MSTR. These are two symbols of an ETF and a stock. The ETF is MSTY and the stock is MSTR, also known, the company name is Strategy. This is a Bitcoin company. They buy Bitcoin and that's how they make money essentially. So if Bitcoin goes up, it goes up. If Bitcoin goes down, it goes down. So the point of this video is we're going to take a look at MSTY and its performance over the last year. Now, on my last two videos, we took a look at performance for their entire life. Coney, Nvidia, we looked at their entire life, how much money they've paid you. But with MSTY, they haven't even been out for a full year yet. So this video might be slightly quicker than the other two because we don't have to look at beyond the 1 year. So here's what we're going to do. We're going to look at 1 year. We're going to look at its performance compared to the S&P 500. We're going to look at its performance, MSTY's performance, in comparison to MicroStrategy, new name strategy, or stock symbol MSTR in that exact time. So, should you have bought MSTY or MicroStrategy? That's the question that you're going to want to have answered, and I will be able to answer that for you coming up here. But, you can make your own decisions as well. So hopefully you're doing great, by the way. If you are new to my channel, I talk about high yield, distribution paying ETFs, mostly yield max. I might start shaping myself into some other ones coming up here, but if you enjoy that type of content and you think you get along with me, hit the subscribe button. I'd love to have you as a subscriber to my channel. And if you guys feel that you find any value, want to support my channel any more than you already do, feel free to hit the supers or the membership option down below. I would love to have you, and anything that you contribute goes a long way to the family. So I really appreciate that. Let's get into it. So I've got Bitcoin open right now, and so we are mid-Friday when I'm recording this video. It is volatile, that's for sure, Bitcoin. So it was, if I recorded this 2 hours ago, it was hovering around the $98,000 range. Right now it's at 96,000. So this thing's going up and down like a yo-yo. It cannot get past that $100,000 mark right now and stay there. If you take a look at the last 1 month, you saw it was up 105,000. What a sharp decline to 92,000. I got lucky, everybody. I don't know if you knew, but I'm buying $100 every 2 weeks of Bitcoin. And I bought at the $93,000 range this cycle around. So I feel good about that. Bringing down my average cost a little bit, but I am going to be like Michael Saylor, buying at the top forever. Let's take a look at MicroStrategy right now. This could change throughout the day here, and by the time this video airs, it may have changed as well. But currently it's at $306. Which is, pretty low for MicroStrategy over the last 6 months here. It has gone up 116%, but if we look at the last 3 months here, in December, that would be 2 months ago, it was at 326, and then November, it was at 397. So it's come down $90 in the last 3 months. So what's the math on that? I don't know, roughly like 27%, something like that, in the last 3 months. So, and I think that has a lot to do, if we go look at Bitcoin here, the last 3 months, it's kind of just hovering around, right? Let's go check out November 21st, 97,000. So Bitcoin's gone down 1,000 since then. So who knows, right? Now, MSTY itself is also kind of doing the same thing. If we look at the last 6 months, down 2.33%. Look at the last month, though, down 19%, which is a big, big drop. There are some people out there that are a little bit worried because they bought at the top, up at 44. They thought this thing was going to 60 and 70 and $80, but that was the top at that time. And since then, it's been a steady decline down to $23 here. So I get it. I totally understand why those people would be upset, right? When you buy high, you definitely don't want to sell low. But what does MSTY do very well? It pays out distributions. And that's what this video is going to be talking about. Its performance in terms of distributions. We're going to talk about drip. We're going to talk about non-drip, and we're just going to see what the difference is here. So I've pulled up a chart. Actually, before I show you this chart, let me show you this chart. This website here is called dividendchannel.com. At the very top of it here, enter your symbol. I've typed in MSTY. Hit enter. When that comes up over on the right-hand side here above my head, a bunch of information about MSTY comes up. So its current market cap is $2.23 billion. This is YieldMax's largest fund. They spend a lot of time on this. If you ever dive deep into MSTY, you'll see they make a ton of trades. They're very active with this fund. I don't know if that's good or if that's bad, but they're very active. Their last distribution was $2.02, and the payment for this is approximately 3 weeks from now. Yeah, you can see there's all of its payments that it's made. It is a high yielding distribution paying, to say the least. And what I did here is I just pumped in February 1st. This ETF itself came out on February 22nd. Holy smokes, tomorrow is the 1-year anniversary. So when this video airs, I think I'm going to air it on Sunday. So yesterday was the 1-year anniversary. Pretty incredible stuff there for YieldMax and for MSTY. So what I've done is I've compared this with the S&P 500. I've gone ahead and loaded the chart up here. Let's go take a look at the difference. So if you had have invested $10,000 in MSTY or $10,000 in the S&P 500, the top chart here is talking about if you use DRIP, Dividend Reinvestment Purchase Program, one of those P's. But basically it means that you set your $10,000 and you tell your brokerage to reinvest every single distribution straight back into the fund itself, right? So some people choose to do this. Some people do it on their own. What they do is they, let's say they're going to get $1,000 in distribution. What they do is they find $1,000 and they invest it on the X distribution date, and then they pay themselves back on payment date that $1,000, right? Just an idea. And the reason they do that is because on the X date, the share price does dip. Generally, the price of the distribution. However, it really depends on market fluctuation that day. The markets are skyrocketing, then it won't dip the full $2 as an example. But if the market's going down, then it will go down more than $2. But on the X date, that's when you have that automatic discount. And the price will be different than a normal day. So let's go take a look. Let's start at the top up here, February 22nd, 2024. All the way to now. So on February 22nd, 2024, the price was $21.19. Now this came out. Hold on one second. I want to make sure I have this correct for you. This came out at $21.19. And when this thing came out, the instant it came out, it was in the $19 range, right? But it popped up $2 almost right away. People were pretty amped to have a crypto type play other than Coney at the time. So there's your $21. The S&P 500 at the same time was $507. So your end share right now, a year later, coming out Saturday, $24.86. Starting shares with 471 compared to 19 over the S&P 500. And if you dripped it, because you got such great distributions for the last year, you actually ended up with 1,365 shares. This is incredible. Your total dividend reinvested was $31.81. Remember, if you bought this second one, it was like $19.47. So your total return is just slightly more than 239%, and your annualized gain 240%, and that's because it's been out for 1 year. Your starting investment, 10 grand, at the end of that 1 year would have been $33,947. No doubt you were happy with that purchase, and that was a great move for sure. The S&P 500 did well too, but I mean, it was up $2,000 in that same time period because you didn't buy as many shares because February 22nd here, the price of the S&P 500 was already fairly high, right? $507. Now, down below is if you choose not to drip, you just want to take your cash, your dividends, and you want to take it and use it on whatever you want, right? So, starting price 21.19, end price 24.86, dividends collected 31.81, and your annualized gain. You can see the massive difference here without reinvesting these back in, 167%. So you left with 26,742. So you did make $16,742. That's very, very good on a $10,000 investment. You know, there aren't too many stocks out there that have that kind of growth. You know, once in a while you get that flash in the pan, things like PLTR, Rocket Lab probably would have done that for you. Tesla may have done that for you in the past with different, if you entered in at certain times. But an ETF, that's unheard of. That never happens. And this is kind of an anomaly. And I just want to make sure that everybody's kind of clear, right? This is like an anomaly. This might not happen in the future. This is past performance, and you shouldn't ever judge and think, wow, this is going to happen every single year. What could happen is the volatility could slow down just a little bit on MicroStrategy or strategy. Bitcoin can kind of flatten out for a year here, 2 years. And that really does decrease the volatility on the most volatile stock on the S&P 500. But it's good to kind of see that, right? To understand that that could change. So I want to do it again, this time with MicroStrategy instead of the S&P 500. So let's compare apples to apples here. I mean, it's not really apples to apples. It's like, I don't know, grapes to raisins. So Mr. would be the grape and Misty would be the raisin. So take a look at the chart up top here. You can see the two graphs. The blue is MicroStrategy, and the black is going to be Misty. So again, we've invested our money into the fund here. 471 starting shares compared to 140 of MicroStrategy. Man, if I had 140 shares of MicroStrategy, wow, that would be pretty impressive, right? Let's take a look at the difference. So, ending shares, because we're dripping on the top example here. You got your 31 bucks, 81 cents. You have your 239% gain. Like, that's amazing. And you ended with 33,947. Now, if you had invested in MicroStrategy at the same time with the same amount of money, you would have had a 355% annualized return here. And your $10,000 would have 4 times its money, up to $45,000. That would have been incredible. It would have been much better to invest in the underlying at this stage, but who would have known, right? Who would have known? Let me know if you got to participate in that kind of action when it first came out. Were you invested in MicroStrategy a year ago? Let us know. And if you guys didn't know, if you didn't watch the last 2 videos, that's fine, by the way. I understand. I invested in the underlying just recently of NVIDIA because I really believe in NVIDIA over the next few years here. I think it's going to be an incredible company, more so than it is right now, right? So I have NVIDIA plus NVIDIA, so I'm double dipping on that one just to get some of that upside on NVIDIA. So if you feel that, any of these yield max ETFs have a great underlying stock, could be a good strategy to kind of double dip. Now, the problem with that is you're double dipping the downside as well. So if NVIDIA goes down, I'm going to experience that loss times 2. Let's take a look at the bottom of example here. So this is without drip. And, it's the same thing, except for you're not making as much, right? So without drip, you made $26,742. And then over at MicroStrategy, 45,000. Well, you made 35,000, sorry, 418 over at MicroStrategy. So quite a bit different, but it's really fun, I feel, to go look at the 2 different stocks. Now, you could do the same thing for Amazon, Netflix, Facebook. Google is a very good one at Yield Max to do this with. If you're invested in GOOY or GUI, man, if you had been invested in Google itself, you would be way, way up compared to GUI. Same thing with Amazon. Amazon's just taken off over the last couple of years anyways. But I think it's a fun little experiment to do. For me, I really do. I am encouraged with Misty. It's my second largest holding, and I want to see it through. I want to see this thing make me money for the next 5 years at least, right? My goal, I have a retirement goal here. I want to get retired as soon as humanly possible. So for me, reinvesting is very important. But before I reinvest, I definitely want to make sure I pay down debt. So I think that's a really important point is that, I have debt. And so, it's not much, but I want to make sure it's paid off. Credit cards are zero, that sort of thing before I reinvest these funds. So, what Misty and Nvidia, and well, not Coney, what Misty and Nvidia have been doing for me for the past 2 months has been paying off that credit card, paying off that line of credit. Ever since Christmas, I've now bought 3 new appliances on 3 paychecks in a row. And so these have helped me pay for life. And I really, really like that. I can't wait to add more money to these funds to help them help me pay for life at retirement. Let me know if you're at that stage in life. And if you haven't yet subscribed to my channel, I'd love to have you. My goal is to get to 5,000 people before the end of the year. I currently have 2 members. If you want to join the membership down below, hit the join button or hit one of those super buttons to support the channel. I'll leave you guys with that. My name is Mike. This channel right here is Health and Wealth. I hope that you have the best day. Bye for now.